Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Capital First posted a healthy set of earnings as far as growth is concerned, but there were a couple of problem points, especially on provisions going higher. Gross NPA increased only marginally. V Vaidyanathan, Executive Chairman, Capital First, joins us now. Good morning, Mr. Vaidyanathan. Thanks much for joining. Well, exactly that. Let me start with the point that the market was puzzled about. Why higher provisions? Have you come along from 120 to 90, or any specific reason why provisions are high?
No, if you see, compare the provisions for the last few quarters, in that sense, compared to last quarter, it's quite stable. But I must point out that in this quarter, we did recognize a particular developer loan, which is a 54 crore loan as an NPA, on which we've taken a provision, 50% provision of about 26 crores. So, but for that, actually, our provisions for this quarter would have been even lesser than last quarter. And as you know, real estate financing, we have practically stopped now.
Okay.
So, basically, we feel that that's the only factor.
Oh.
But overall, the net NPA of the company is still, even after accounting for it, is still 1%.
Yes.
And but for that provision would have been 0.8%.
Okay. And just because of that, is the cost to income ratio higher? 55.5. I've never seen such a cost to income ratio for Capital First. It used to be hugging the 50s.
No, it used to be around close to the 52 to 53%. You know, there are a lot of businesses which we're continuously investing in. For example, housing loan business is a factor we're continuously investing in. So, on an average, despite investments quarter on quarter on new businesses, our return on equity has been consistently climbing. So, we're quite happy. This quarter, we touched close to 15% return on equity, which is actually quite a landmark number for us.
No, I meant cost to income. Cost to income has gone to 55.5.
I understood.
Yeah, sorry.
No, I'm saying yeah, 55. We used to be 53. So it's not a material difference.
Okay. Mr. Vaidyanathan, good morning. Thanks so much for joining us. I wanted to understand a little bit more about how sentiment is as far as the loans are concerned within sectors like, say, consumer durables, two-wheelers, MSMEs. Where are you seeing the fastest pace of growth, and what do the next few quarters look like?
I will tell you our numbers. For example, in our case, close to 57% of our loan book is the small and medium enterprises business. 37% is consumer financing, consumer meaning even people who purchase even a used car, for example, it's all part of consumption items. And close to about 7% or 6% is the wholesale financing business. Now, for us, each one of these businesses are growth areas, and frankly, in India, you could see the sales of Maruti, you can see the sale of two-wheelers, you could see the sale of FMCG companies. They're all posting fantastic results. So on that space, I think the growth is looking very, very strong.
Okay. I just wanted to ask you about this one-time income and a one-time hit in Q4 that Capital First has seen. Can you just tell us a little bit what this is about?
The one-time hit we already talked about. There was one real estate loan of 54 crores, which we recognized as NPA this quarter. We have taken a 50% provision, and that's quite conservative. We believe that this entire money will be recovered in the times to come. We just wanted to show the developer and to everybody that we will come after you if you don't pay your dues, and we are not scared of declaring an NPA. So that's as far as the expense is concerned. As far as income is concerned, again, there was an offsetting figure of 23.5 crores, which we got as income from a customer, which was one-time in nature. The net figure of all of these was actually, but for these items, would have been positive. Our net profit would have been 97.5 crore against 95 we reported. So as far as shareholders concerned, they should know that net of these items, we would have actually been positive.
Okay.
By 2 crores.
Okay. Well, it's a very impressive growth number as far as assets under management are concerned, 38% year on year and about 10% quarter on quarter. Can you guide us in terms of loan growth in FY19 as well? Which would be the sectors?
I described to you that in India right now, the grassroots economy is doing really very well, notwithstanding what we talk about on the macro, the corporate side. And our business is entirely predicated on that growth. And for us to we feel extremely comfortable guiding for a 25% growth on the loan book. Our profit after tax has been compounding at about 39 to 40% for the last 5 years, which is basically faster than the growth of the loan book of 25%. So we believe that trend should continue into the coming year as well, which means profit should outpace the growth of the loan book of 25%.
Okay. And what kind of, can you give us any color on what the loan write-offs have been in this quarter, and has the trend been higher than what you've seen in the last few quarters?
No, trend has actually been lesser.
Okay.
If you just analyze the numbers a little deeper and you take the provision numbers of the last quarter, but for the 25 crore item that we took this quarter to the NPA, the net credit loss for this quarter is actually lesser than last quarter, despite the loan book growing by close to 3,000 crores. So our credit loss numbers have begun to come down, and we believe this is a sustainable trend, which is one of the reasons we're guiding for higher profits in the coming year. In fact, this quarter, we are touch and go at 100 crores. We believe we are going to cross the 100 crores profit per quarter very soon, probably even next quarter.
When does the merger take effect? Is it October 1st? Is it for the second half?
First of all, I would make an important caveat subject to regulatory approvals.
Okay.
But we would say that the application has actually gone from IDFC Bank side, not from our side. And from what we hear, it's routine, it's on track, and no significant concerns have been raised to them at this point of time.
All right, Mr. Vaidyanathan, we will leave it at that. We will look forward to that merger and post-merger questions thereafter. Thank you very much for joining us.